The December opening candle retest. Ali Martinez dropped his SEI analysis on December 3rd, and the timing matters. SEI just retested its exact December opening price, a level that carries historical significance across multiple asset classes. When a token wicks back to a monthly open after initial movement away from it, it's testing whether that level will hold as support or fail as resistance. CI held it. That's your first signal. The weekly bullish RSI divergence. Now here's where the technical setup becomes compelling. On the weekly time frame, price carved lower lows while the relative strength index formed higher lows. This divergence pattern indicates that bearish momentum is fading even as price continues grinding lower. It's the classic precursor to trend reversals across every asset class. Stocks, commodities, crypto, doesn't matter. Martinez stated it clearly. Now that we nailed the move up to December's open, I'm watching for SEI to break 0.142. Clear that level, and a 20% move to 0.164 opens up. The critical 0.142 resistance. That 0.142 level isn't arbitrary. It aligns with a multi-month descending trend line that's capped every rally attempt since mid-2025. Price has tested it 3 times since August and gotten rejected each time. But here's the thing about resistance levels after RSI divergences. The fourth test often breaks through because the selling pressure that defended it previously has been exhausted. So, a weekly close above 14.2 cents would, actually invalidate the entire bearish structure that's contained SEI for months. That level would flip from resistance into support, and the measured move targets 16.4 cents, representing a clean 20% gain from the breakout point. Alright, let's talk about the current price action and volume. As of the latest data, SEI is trading at about 13.85 cents, up roughly 8.4% in the past 24 hours, with volume surging past $148 million. That volume expansion really matters because, breakouts without volume usually fail. But breakouts with volume, they tend to follow through. Now, the 13 to 13.5 cent zone, this was previously resistance that rejected price multiple times, but now, it's flipped to support. Price reclaimed it, defended it, and is actually using it as a launchpad right now. Honestly, this is just textbook accumulation behavior before continuation moves. Let's look at the on-chain metrics supporting this setup. Exchange balances for SEI keep declining, which means holders are moving tokens off exchanges into self-custody. That in turn reduces the available supply for selling. Staking participation is sitting above 58%, so even more supply is locked up. And SEI's parallelized EVM, the fastest executing layer 1 according to stress tests, processing up to 28,300 transactions per second. Well, that provides the kind of fundamental narrative that can really attract capital once technical resistance breaks.